the 11th of November. Happy Friday, 9 o'clock a.m. Eastern Time. Let's get started with a risk disclaimer. First things first, we understand risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. Did I mention cryptos and risks? Yeah, we kind of had that today, right? Or this week. All right, if you're following me out there on social media, make sure it's the real me. I'm most active on YouTube and Twitter. Really started to fire up the Twitter. I'm posting some charts on TradingView, probably once or twice a week, or day rather. So at Real Chris Pulver on Twitter, youtube.com/Chris Pulver, or the handle youtube.com/at Chris Pulver. So you're here. All right, let's get into the charts. I think this is probably one of the more important charts of the week. If you were with me on Monday for the live session, this is what we typed out. We were expecting CPI data this week on Thursday, and it did not disappoint. Well, it may be disappointing some bears, but not us. We were expecting, if we had a decent print, 7.7 or less, happens to be that's exactly what printed on Thursday. The market loves it, rips higher, trillions sitting on the sidelines waiting to be allocated and re-leveraged. We started to see a massive drop in the dollar, a massive drop in the 2-year yield. And, if we had a stickier inflation print, then yeah, it would have been look out below, more volatility. But the market ripped one of the largest single days since 2020, which we kind of know what that was. That was probably that capitulation, crazy, ridiculous, like, oh, stimulus, liquidity bazooka that came in March 2020. The market did it all by itself with just money sitting on the sidelines. So we're going to look and see where everything's at today. Let me go to a candlestick chart, go to the daily, and we're looking at 396. So another pre-market to the upside. Futures is screaming a little bit higher. This is good. Okay, the last couple of weeks, the last couple of months, I mean, I have been echoing and echoing. If we're going to get a rally on the stock market, we have to see a weaker dollar. And guess what? Oh my gosh, we finally had it. There's my weaker dollar. There's my 200 EMA on the daily bar count. We're going right down to it, hopefully today. I mean, honestly, might be one of those things where it didn't really offer pullbacks unless you're trading smaller time frames. I have had, stacked orders up. I'm up on my Aussie dollar. That was a little breakout trade that is now up around 150 pips. My pound US dollar trades, my euro dollar trades, those have all been breakout trades. Those are up some nice profit. So I stacked up a group of trades on the euro dollar. Those are collectively up about 230 pips. Still riding those a little bit longer. My pound US dollar is in profit with a nice little breakout as well. I have one of my best positions on the pound dollar is currently up about 830 pips, and I'm looking after this kind of 1850 to 1900 zone. I'd like to get to 1.20, but I'm going to keep an eye on this one to see if we can come back to like 1850, 1900. I'll probably take some profit there. What else? New Zealand dollars ripping to the upside as well. That's pretty good. Had some breakouts there added in. Those are each up. All breakout trades, that's up around 219 pips. So I haven't taken profit yet. I did close out my dollar CAD. I was in a 3350 trade and a 3300 trade. I closed it out each one. So 3350 was up about 75 pips, and my 3300 was like 20 pips. So took a net, 100 pips or so on that trade. I did not add anything to it, which I wish I did because my 1.40 entry was not filled. So I'm just looking at my charts as I'm doing this. I'm looking at this other screen. This is MT4. I'm just going through my P&L. I've had a pretty big swing this week in profit in my favor. Also had excuse me, a fantastic day in stocks yesterday. Here's a look. I just took a little screenshot. Up $108,000 on the day, 6.47%. I was actually outpacing the market on the day, which is pretty nice. Somewhere right between the S&P and the Nasdaq. The Nasdaq was up 7+% yesterday. Here are the Qs. So the Qs are up 7.3% yesterday. The SPY was up 5.5% yesterday. Had some interesting reads. I will, if you want me to forward them, I can, or I can pull them up. Let's see here. I took some screenshots on Twitter. Thought they were interesting. So let's do this. The S&P gained 5.5%. That was yesterday. The largest percent increase since April 2020. The 15th largest since 1950. The modern stock market since 1950. The 15th largest single day. 1 year later, the market has often been higher following these large daily spikes, 22 out of 24 times, with an average return of 31%. So, if this means that we're putting in some pretty big runs, the bulls might just be getting started. However, just to kind of maybe put a little salt on that to kind of bring it back to reality. So 22 out of 24 times the market has led to an average return of 31%. This is the S&P. The two exceptions, I find this very interesting. September 2008 and January 2001. Fresh in the Great Recession and fresh out the dot-com bubble. All right. So what is 2022? I don't know. Is it somewhere in between there? Is it a tech bubble? Is it the Great Reset? Um, we'll find out. We will certainly find out. However, given the timing of this right here, this is the Qs at 285. If I look at the SPY or the SPX, I mean, we're up here 396, another couple dollars to the upside. We have our 200 EMA around $400 on the SPY. We have some outer trend line resistance up here. So this high is around 425. If we just bring it, let's say the market's going to rip straight up. We're looking at something between like 405 and 409. So if we see a little bit more upside here, that is where the bears would have to step in and defend, right? If they are absent, then I would just be going after a breakout towards 425. But I do think that 405 to 410 is feasible, and that would give us a pretty interesting recovery. So if we go from that CPI low, not yesterday, but the previous CPI from October, if we run up to that 405 to 410 level, that's a 17+% rally off the lows. Okay, now keep in mind that a 17% rally off the lows is great in the near term. It still doesn't finish high for the year, right? It finishes probably right in between. So if we are down, I think the peak to trough here was about 27.5%. So that was 27.5%. And if we finish right up here, the market still finishes down about 15% for the year, right? Even with the 17+% rally, we're finishing around 15% in the hole. Now, this goes to show, again, what we talked about since, July and August, which was the first half of the year is one thing and the second half of the year is another thing. The hard part was that this second half of the year just waited until this week. Midterm elections, plus we had the better than expected CPI news. So now the Fed doesn't get to say anything until December 14th. So if that's an open window for the market to rip, I think that's what's going to be really interesting to see how aggressive these bulls can be on covering some of these crazy positions that have been in trouble, right? So let me get logged in here, see what's up with everybody. Brad in the house first to the line. Brad, welcome, welcome. Thanks for being here. What else do we have here? We have Linda. Good morning, Linda. Steady as always. Chris, good morning. Gary, good morning. Peter, good morning. Walter, good morning. Daniel, good morning. Steve, good morning. John, good morning. All right. Cherwinuk. Sorry if I slaughtered that, but good morning. Nice to see everybody. All right, let's get some attendance coming in here. Tony, what's up, man? Is this Tony M who just crushed it this week? Yeah, clearing thousands of pips like it's no big deal. Willard, good morning. Mo, good morning. All right, nice to see everybody. Okay, so 2 cents there on the market. 396.46 with the SPY. So we're heading back up, likely to 400. Like I said, pretty solid technical resistance between 405 and 410. I just like the fact that after this week is over, are we officially in with the midterm elections? I'm pretty sure that the Senate is maintained by the Democrats. I think the House was lost to Republicans. So it seems like gridlock is in order. But we've got all this nonsense like, oh, we can't figure out how to turn in ballots and we can't count them or whatever. So that's cool. Not. Let's see here. Senate split. Interesting. I don't know. I honestly haven't even been paying attention. I sent an absentee ballot. Senate still up for grabs. Must be too close to call. Perfect for your Wolf Blitzers and Peter Kings and Anderson Coopers, just to keep 24-hour broadcast going. All right, I'm not looking at the news. I don't care. So I want to see what happens, but if it's a split Senate, that gridlock is good. Historically, that has proven to be better than having a Democrat or Republican-controlled administration. So we'll find out, but apparently we're not done yet. Okay. Thoughts on exit for the U.S. basket? Yep. So we talked about this yesterday. Here's what I'm looking for. Watch this DXY. My thoughts on an exit would be here. If this DXY drops down to this 200 EMA, I'm exiting positions, right? So, and again, I know that this does have an influence. I mean, the euro dollar would be heading up likely to its 200 EMA. So that's my plan. If we head down to this red line, that's my 200 EMA. I'm getting the heck out of these trades. So I will take some non-FIFO. I'll close up full positions. Hopefully this means good profits for, exiting Aussie dollar, New Zealand dollar, Euro dollar, pound dollar long, dollar CAD short, perhaps dollar Swiss if you're short, dollar yen. Just look at this on each chart. So this is a chart alarm that I set. I believe I set this yesterday, but I'm going to set it again just in case. This is a 200 EMA cross. So if price touches it, I want to know on the daily time frame. And, it's Friday, so I'm kind of hoping we have just another massive day to the downside, and this thing wants to touch it today. Because I don't want to have to pay attention Sunday night when the Forex market reopens. But I will. I mean, chart alarms are set for a reason. If I have to get on my phone and, log in, that's fine. But anyway, that's my target on the DXY. How does this translate to other currencies? Here's the Aussie dollar. Still have room to get up to this 144 and 200 EMA. The Euro dollar, we still have room to get up to this 200 EMA. You can see this one's pretty close, right? This is 103. This is roughly 104. Between 104 and 105, that's kind of my move on the Euro dollar. Let me check something really quickly with fib. If we go from low to high, we are hitting a D extension right now off a 786 pullback. So yeah, I would want to be protecting profit into that red line, that 200 EMA. So we still have another. This is roughly 104. So we have another 70 to 80 pips to the upside on this one that I'm watching for. All right, and I would be looking to peel off some positions once we hit it. So I'm going to stay the course on Euro dollar. Set another couple of chart alarms. Let me just add this. I'm going to have this chart alarm thing going crazy, but that's okay. So if we hit that red line on the daily, I want to know, and that's another 80 pips higher. So I do have a bunch of stacked orders starting below parity. So 1, 2, 3, 4, 5, 6. I have 6 orders stacked up that are all non-FIFO, and so that is probably the chunk that I will close for about a 400 pip gain on 6 positions. So I'm looking forward to that. I know this could run up into 105. This 105 level in the weekly time frame is really strong structure. Take a look. Right, previous lows right around 105, 30, 104.70. Previous lows around 105. This low here is around 103.60. So I'm just watching, right? This area is a nice strong support level around 105. So if I bail a little bit, I mean, I don't want to. I don't want to get out of the trade at all. But I'm probably going to, just to be on the safe side, make sure I'm locking up some profit. Okay. All right. So that's the Euro dollar, pound US dollar. Same thing. Look at the daily time frame. Pound dollar, room up to this 200 EMA. We have this one sitting around 2100. I've said for the last couple of months, if we can get up to 1.20, I'm pretty happy with that. 1.20. If I also stretch, let me check something really quickly. If I stretch a low to high, okay, if I stretch a low to high, we had a 5-0 pullback. We're heading up into that 127 extension. If we can push, if we can push up to this 618 extension, that does hit us with that 200 EMA. So like I said, 1.20, all these chart alarms are set. I'll be protecting some profit on that one, and hopefully we see some additional pound movement to the upside, or just dollar weakness. Really, it's just dollar weakness is driving it right now. New Zealand dollar, same thing, room up to the 200 EMA. So that's what I'm looking at here. This is around 62 to 62.50. Dollar CAD, like I said, I already took some profit on this one. We're heading back into 32.50 or 3200. I would be protecting profit in here. That was our breakout point. As soon as we had this breakout, I was starting to get short at 33 and 33.50. I did not get filled at 4,000. Obviously, I wish I would have, because that would have made this trade a lot more profitable, a lot faster. But I did look at a short trade on this little, head and shoulders, and it played out really nicely. So I protected profit here, little non-FIFO scalp, and that's dollar CAD. I'm out of that trade. Dollar Swiss. Dollar Swiss has been my hedge. So I did get filled on another buy, I believe. Yep. So I now have 2 positions in on the dollar with a break even around 98. And I'm just going to sit tight in this one. If this one wants to keep dropping, that's totally fine. I've got another entry all the way down to 9,000. So entry 1, entry 2, entry 3, and I'm just going to trade this larger range. Okay. I mean, support resistance, a major range on the dollar Swiss. And then dollar yen, this 200 EMA is 430 bars. So I even have it marked on this one. This is one of my big trades. So, I'm getting some pullbacks here on the day, but we had some fresh lows. Hopefully we head down into some, 135, 134 levels. This 200 EMA is sitting around 134.30. So I'd be happy, like I said, 135 to 134 window. Let's see here, 135 to 134. profit window. Okay, and I'd say that qualifies as good enough. So a weaker dollar, a push up in the stock market, dollar yen hopefully gets an extra bid to the downside, and let's go, man. Let's get this thing massively bearish. Let's see if we can challenge this low, because that would actually put in what could be a pretty awesome top. We could be putting in a massive head and shoulders here, right shoulder, break the neckline. That could be coming later, but let's see where this thing can land a low. Hopefully we land a low right in here, protect some profit, and we're walking away, moving on. Okay. Pound New Zealand moving something this morning, 100 pips. That's good. Yep, that's good. Nice little scalping. Here is the currency strength on the night. So Swiss getting a jump to the upside. The dollar's weaker. Here's yesterday. I took a screenshot of this and posted it on Twitter. So here's my Twitter handle, @RealChrisPulver. Let's see here. I don't know if it shows, my post. Maybe it does, maybe it doesn't. Yeah, this was my post from yesterday. Patience and opportunities definitely being rewarded for dollar sellers today. Fed doesn't speak and chime in until December 14th. Currency strength chart, that was yesterday. Look at that. JPY up, pound up, everything. Dollar just got smoked yesterday, and it was about flipping time. So this is one of the largest vertical axes I've seen in a long time. We've had some pretty good pockets of volatility this year, but this one took the cake. And we made some nice pips yesterday during CPI. We had really a lot of our positions that were waiting for this move for months, and we're starting to get some really nice payouts now. So Tony, I know you killed it. Tony, what'd you do this week, by the way? Like pip wise, I'm just curious. I'm gonna check in my Perfect Storm Pro, how to do this week. Cleared 459 pips. So a little automation, never hurt anybody. 459 on the Perfect Storm. That's Perfect Storm Pro, and then here's my original Perfect Storm. Still doing pretty well, 581 pips. My Pockets Pattern Pro robot. This is at, wow, 780 pips. Ooh, baby. That's not a bad week for some automation. 780. 780. Plus, get out of here. Plus 581. Plus 581. And 459. 459. 1820 cleared in pips with robots, and running with some pretty nice profit positions on these dollar crosses. If I close out, euro dollar, Aussie dollar, anything. If I close out any of those dollar related moves, I'm looking at another probably several thousand pips. I've been positioned for dollar weakness for a while, and it is all coming very quickly and with some high volatility. So hopefully this is just a big old payout, and I can, put a big smile on my face going into the holiday season. Good stuff. What up, Jason? How are you, man? Okay, nice to see everybody. Yeah, if you do me a favor while you're in here checking it out, just click on the thumbs up button for me. That's how you say hi, right? That's how YouTube acknowledges your hello when you're watching live. Is click that thumbs up button for me. All right, got some delicious coffee today. Any charts you want to take a look at? Any charts you want to take a look at? I just have a bunch of chart alarms set on the dollar yen. I've got pullback chart or pullback as well. So 142. I'll put a 142.50. I'm still looking to fade this move to the downside. So even if we have pullbacks on dollar yen, I'm still looking to fade this. Right? So we have, high to low. This measured move breakout is probably hitting symmetry right now. We can specify that. Let me check here. Dollar yen. Yeah, we're probably beyond if I put a box around this breakout candle. So let's do this. Let's take a little box, high to low. That's my BOJ intervention candle, right? If I double this and attach it right there, we are looking at very close to hitting symmetry. In fact, we hit it. So there's my high to low. There's my breakout. We did it really in less than 24 hours. We hit our symmetry on the BOJ breakout. Hopefully, any type of pullback, we do it again, right? Hopefully we do it again. Or, like I said, because of that crazy high bar count, we just continue to drop into challenging this previous level between 135 and 134. All right. But I'm looking to fade this on further pullbacks if we get any. Okay, there you go. Peter says, I banked over 2,100 pips so far. Excellent, excellent. And more to come. I love hearing that. Yep, hopefully a lot more to come. Yes. All right, so I will be watching to closing bell. I'll be watching to 5 p.m. on Forex. Stock market wise today, we had a big day yesterday. Not going to complain at all. Stocks that might be getting called away. A lot of my expirations are for next week. If I go into, let me find my notepad here. I did quite a bit of maneuvering yesterday. We have bonds that are up. So the TLT, we added some extra trades on the TLT is trading at 98. We did some 96 by 95s, which is not bad, right? Or wait, this is, yeah, it's 96 by 95. We collected 55 cents. This is up. These are some profits here, and maybe Q1 that would be pretty solid. Unfortunately, because the quick volatility on the bond side over the last couple of months, the broker did assign us early. But this 103 by 102 is going to be interesting. Perhaps we can sneak in a little win right here. If I can get a win above the 103, and then we have the 96 by 95s. So 40-cent loss, 40-cent loss. If we can squeak out a win here for 60 cents, and then we can squeeze out 3 wins at 55 cents. That would be $1.60. So a 60-cent win with $1.60, that gives us $2.20 per contract, which isn't bad. Little exposure there on the TLT. We also have some exposure on the IEF. We have the 95 by 94.50 and the 95 by 94. Right now we're trading up to 95.21. We have some stocks. We have the UUP that we've been running with. This is a big move against the dollar. We've been short on the UUP, and we're long on the FXY, which is a run against the dollar and strong yen. So a stronger yen is clearly happening with a weaker dollar, and we had this massive $10 credit spread that we collected $9 or $9.10 for. So unfortunately, I was assigned on this one, but I mean, obviously looking at this one, it would have been nice. Again, hindsight doesn't help anybody trading, but it would have been nice if we were willing to take assignment. Because when we got assigned here, we were already trading in the low 60s. So we would have had a break even probably around, 60. I was thinking probably around like $64 to $63, which is right off these lows. And the price is now at 66. So if you protected that, you lower your cost basis. I mean, this is pretty nuts, right? 75 would be the assignment. I'm just doing the math here. So 75 would be the assignment, collected $9.10 on the credit spread. And if you close out a long put on top of that, let's say the long put was worth like $1, your break even would be it'd be 64 and change. So let me do that again. 75 minus 910 for the credit spread, minus let's say $1 on the put. Break even at 64.90, you'd be up $1.20 on the shares. Never taking a loss, but that's, you had to take assignment for that. We didn't do that because we were uncertain like how ridiculous is going to get. Is the Fed going to break something? So we got assigned. We just took the loss, right? Small loss of 12 cents. But here we have this trade, which could be worth a massive credit going into January. So I know that price has to rally like crazy. Are we coming all the way back to 75? I doubt it. Okay. But because we collected $9, our break even on this trade is actually around 66. So we should be break even on the trade. Anything more to the upside is going to be hopefully $1, $2, $3, $4 in credit. And, we'll make up for that small loss and walk away with a nice profit on this one. So pretty interesting, FXY, that's a nice way to play the yen with some options. The UUP, a nice way to trade the dollar with some options. We've been trading that in equities on demand. We also have some other stocks. Alcoa had a nice rip yesterday. Pre-market's at 45.45. I got a cover call next Friday. NCLH, I'm looking to lose this one next week for some profit. HIMS, might get this one called away at $6 next week. What else? There's a couple more. Tesla had a big run yesterday. But I'm still, again, I don't know if Tesla is we're kind of losing a lot of luster in the FANG stocks. So I might have to look at considering some bull put spreads, or I might just stand on the sidelines on Tesla and just wait. This is a nice correction, but it's 56%. I think there's potentially more downside though. If we have a broader market rally, I'm not going to complain, right? If a broad rally on Tesla gets us back into 230, 240, 250, I will just aggressively cover it, work it down, and try to lose this at range highs. So perhaps we have a decent rally, we'll go up to range highs. That's fine. You saw how big of a day the market had yesterday. If I go to the heat map, let me see if I can find the FinViz heat map. That's blank, so let me find it from yesterday. Let's go to my inbox. I think the inbox in StockTwits. All right, let me find my StockTwits from yesterday. There it is. Okay, let me take a screenshot of this and show this. All right. So this was yesterday's heat map. Pretty outstanding. And I'm sure a lot of traders thought, "Am I red-green colorblind for a second?" Because we have not seen something like this for a while. But not just green, but the numbers, right? The numbers, big numbers, big numbers, big numbers, and it looks like mega cap tech got pumped right back into to profit. Right now, everything did pretty well. I mean, energy was actually the lag, technology led, but we had some pretty good jumps. I mean, just look at your FANG stocks. Meta was up off the lows yesterday. They're also looking to cut jobs. This to me would be like a short term. Now, do I think that there's permanent investors out there in Apple, Microsoft, Google, and Amazon? Yes, because I think your traditional financial planner is doing nothing more than dollar cost averaging. Your average 401k is using targeted funds, and they're dollar cost averaging into these major mega cap stocks. Um, so again, they're going to get some love on a broader market rally. But I think what's happening behind the scenes that we talked about this week is we're getting this pretty obvious exit from tech and into real stuff. So what is real stuff? So rather than trading technology where it's 30, 40, 50, 100 companies that fail to one that wins and actually makes money, instead it's like, let's put our money behind companies that are actually sitting on cash, that are profitable, that make something, that provide a service, right? That haven't had just, I mean, look, this it was a great run for Apple, Microsoft. It was a great run for the FANG stocks. But I think there is a pretty serious rotation going on back into value, to materials, to energy, perhaps, and probably defensives. I mean, I like food right now. I like Kroger. I like Albertsons. I like McDonald's. I like Keurig Dr Pepper. I think Kraft Heinz is another one we trade. KHC. We could be losing that stock next week for profit. Then we have some material plays: CLF, X, FCX, some copper plays, some steel plays, aluminum plays, Alcoa. So anyway, we're pretty spread out, pretty diversified, which I'm happy with. I think it's helping us in this situation. And like I said, I was pretty happy to see, 6.47% on the account with a six-figure day, and that actually beat, one of the 15th largest days in the S&P. So hopefully there's more to come to the upside. All right. Let me open up my notes for today. Class at the top of the hour for equities on demand. I need to find that note. Full portfolio, I think, is what it is. I think. And let me search for my 11/18 expirations. September, discussion, notes. Here we go. Okay, here it is. So November 7th through the 11th, and just reviewing all my positions. Next week is a busy week. We did do quite a bit of management yesterday. We closed up some credit spreads for profit. I can share that here. And we're still looking to lock in some profit today if we have any other ones. But let me check my equities on demand. So this is what we did yesterday. So we took a small loss in Alibaba. Broker assigned us. We closed for a loss of 235, which is fine. We were risking $2.50. We saved ourselves a little bit of money there, so we lost 235. For gold, we closed up profit early, but they were next Friday expirations. Gold had a nice rip yesterday. We closed up for 225 net profit, and that was a nice little trade. And then we closed up for, let's see here, AEO, looking to close out for break even. That's a trade for next week. KHC closed out for $1. Corn we closed out for 55 cents. The Vixen we closed for a small loss. Corn again we closed for 80 cents, and that was actually way early. That was a January expiration. We closed out for 80 cents, so $1.80 on corn. Which again, if we have an improvement in inflation, we're seeing some of those plays. I'm trying to think. DBB, as in Delta Bravo Bravo. Those were dropping a little bit. Those are commodity-based ETFs. Those were really getting some love for the higher inflation scares, and so inflation is backing off a little bit. Then some of those instruments will dip a little bit. I said a little bit, a lot, a lot of bit. But anyway, had a pretty good day yesterday. Closed up the things early, cleaning up our 11/18 expirations. Stocks are going to get called away next week, and that's a good thing. That's a great thing. That'll give us a nice little, bag full of cash going to the holidays. We can keep our eye out for, more rallies and enjoy some of the runs. Keep doing covered calls and getting stocks called away. Maybe roll some covered calls. We're confident in the direction, and buckle up for an interesting Q1. Because I think right now it's probably, markets may be looking to get into holiday mode. Hopefully it does. And this trajectory we've been waiting so patiently for is going to continue to run. Okay. So if it continues to run, like I said, heading back up into some resistance areas, 405 to 410 would be pretty fantastic. Okay. So we will see. Any questions today? Any charts you'd like to take a look at? Basically, the chart that I'm watching today and every chart that goes with it is the dollar index. I'm looking to have this dollar index come down to this 200 EMA. I'm looking to fade this move. So even if the dollar index pulls back, if we pull back, I'm still looking to fade this move for another chunk lower, find that 200 EMA, right? We originally thought, this week I was a little scared going into this week thinking like, man, we're right here at this support level. This dollar could rip on CPI data. But fortunately, it was better than expected and the dollar just tanked. And hopefully there's more to it because this is technically way overdue. So it's nice to see the technical kind of unwinding. This bar count to me is the reversion to the mean, and that would be my profit target. So if we have a break, a pause, and a go, that's fine. If we have a break, a retest, and a go, that's fine. I'm still looking to fade the dollar for a few more positions. Okay. All right. Good stuff. So that was about 100 miles an hour to cover everything from Forex to stocks. We've got some option plays. Bitcoin had a nice little jump off the lows. Again, risk on rally. I know that crypto in general had a ton of drama this week, and it's not over yet, right? I mean, Bitcoin's down in the day. We're at 16,496. Look out below. Mining costs on Bitcoin are right around 15K. So we might end up getting a strong bounce off of that. I have limit buys at 15 and a limit buy at 10.5. But that is about it. I'm still just kind of dollar cost averaging on crypto. I'm just chilling for a little bit. But I'm willing to say, okay, I'll add some more. My cost basis on Bitcoin is still below $10,000. And that's over the last 4 or 5 years. I mean, I bought it at 3,600, took that right up to 60 plus, took my profit there, and then I started dollar cost averaging back in around like 25, 20. Had a couple of trades here at 18, and then I put another 18 in. I've got 5 and 10. So I still have a base position here, took some partial profits, but I'm looking to load back in and just playing with profit money, right? So I'll keep an eye on this one. Ethereum, same thing. Crypto's in a little bit of trouble. We had a massive wipeout of market cap this week. Ethereum is at 1217. We have really strong support at 1,000. There's also a really big pocket back here around 750. There's also a yearly pivot from 2021 around $525. So just make some notes there. Possibly the $750 to $500 mark. 750 right there, and $500 right here. Okay, so $750 to $500. I'll put $550. That's right around that yearly pivot from 2021. Okay, so a couple levels as far as dollar cost average into Ethereum that I look for. But we'll see. I mean, Ethereum still can hold the base around $1,000. All right. FTX just filed Chapter 11. Yeah, I know. Once the Binance once the Binance merger or the bailout fell through, then yeah, FTX is screwed. So what are you gonna do? I mean, I don't even know what the heck they did, man. But it just, if anything, there's a saying, not your keys, not your cheese. So if you have, and I have some money in Coinbase, and that's an on grid exchange. So I need to get that off grid into my ledger for the purchases I made this week. So I'll be doing that today or this weekend. But it's important. I think it's important that you have a off grid storage, cold storage. I mean, Ledger. That's probably the easiest one to work with. There's a couple other ones as well, but that's what I'm interested in doing. Anything I'm buying. I mean, Coinbase makes it super easy to buy. Coinbase Pro, Coinbase Prime, really easy to buy. But once you buy it, I'd say send that to yourself as opposed to keeping it on exchange because look at what happened. FTX was an exchange. Binance is a broker, is an exchange. But if there's insolvency issues or bankruptcies, that money is not safe, right? And it would be the same as a bank. I mean, yes, you're FDI insured up to 250K, but to what? If a bank is insolvent, if the government's insolvent, what are you going to do? I mean, there's nothing they can do, right? So anyway, not your keys, not your cheese. That's the deal. FTX, yeah, it was a broker. FTT was the token that backed it. I honestly probably am speaking very unintelligently about this because I had no interest in. Here's what I'll say. FTX, we'll just say Matt Damon, right? I'm pretty sure Matt Damon was an FTX guy. If he wasn't, it's Tom Brady, or it was Larry David, or it was all the other celebrities that during the Super Bowl. By the way, I had an interesting tweet this week. If let me see if I can find it. This was crazy. If you took $1,000, and I don't know if this math is truly correct, but if you took $1,000, let me see if I sent this over to my partner. I know that, so give me a sec. Let me find it. $1,000 and short of the Super Bowl ads from this last year in January, you would have been like, I said you'd be a billionaire, which honestly, there might be some truth to that because there could be so much downside potential with everything dropping, 70, 80, 90. Look at this. This is crazy. Fun fact. If you spend $1,000 shorting the 2022 Super Bowl advertisers, you'd be a billionaire today. FTX, Carvana, DraftKings, Uber Eats, Meta, Rocket Mortgage, Coinbase, Vroom, Salesforce, and GM. Holy crap. Every one of those. I mean, FTX is essentially busted. Carvana's single digits. DraftKings down like crazy. Uber Eats. Did Uber Eats go public? I mean, Uber's down. Uber's down like 70, 80%. Meta's down 70 plus percent. Rocket's down to crap. Coinbase is lost a ton. So yeah, you're looking at like 70, 80% moves. You're just talking about massive compounding on that $1,000. So fun fact. Yikes. But that's the year that was, right? 2022 has been crazy. So Tom Brady with FTX. Okay, yeah. Okay. Let's see here. When you watch those footprint, yeah, I still need to watch those, Daniel. My bad. I still have not had a chance to watch those. I will watch those this weekend. Yep, I'll get back to you. Sorry, man. It's been a busy week. I've been in some webinars and everything for Masterflex and stuff. So it's just been busy. But I will get to it. I'll get to it. Especially, I know you said that you see a lot of similarities with the analysis and stuff. So I'll take a look. All right, all right. I'll wrap it up there. I'm going to take a little breather. Just got a voicemail for some reason. I don't know what the heck it is. I'm going to drink my coffee, take a little 20-minute break, watch my chart alarms. We got a lot to talk about today in Equities on Demand. It's going to be a busy day. Got class at 10 with Equities on Demand, class at 1 with Masterflex. Looking forward to seeing everybody for week 2. We're going to take a look at the robot again, get to know. Let me see if those videos were posted. So new class just launched. Last couple weeks I've been in webinars for it. Market traders. I got to learn.markettraders.com. I want to see if those videos were posted. Yep. So it's today, Linda. So today we have class today. So it started last Friday. We had a class last Friday at 1 p.m. That was like a big overview class, and today we're going to get a little bit more specific, diving into the automation. I want to get traders really, really comfortable with that automation because this week during CPI, some traders were just throwing the automation at it, and it did really, really well. And there's going to be opportunities to do that just using. Mark, what are you doing, bro? All right, so I have there should be 9 videos in here. We also have our Masterflex Telegram channel. So more and more people joining, which is good. There's going to be more to come. So we have a true community now where everyone can see comments, everyone can chat. So I'm super excited about this. And questions are starting to pop up here, so I'll start to get to those questions. But it's not just me. It's questions for students that are savvy with the education, have done the homework, are comfortable with the robot, or deploying the robot. Students like that can come in and help each other, right? So there's probably gonna be some questions where it's gonna be product support and stuff like that. But nevertheless, it's exciting to have an all-to-all chat versus one-to-all because I have a lot of those. I like the all-to-all, so everyone can chat, have a little community, and let's make Masterflex awesome. Okay. All right, cool. So 10 o'clock Eastern time, I will see everyone in Equities on Demand for my stocks and options students. And then 1 o'clock Masterflex, looking forward to another great class. And then I'm also wrapping it up this week with a Wealth and Freedom from 3 to 4. Nice to meet some new traders. And that is it. So pretty wild week. I'm not going to lie. I'm smiling. I'm happy. It's been a pretty big P&L swing for me. Probably over 175 to 200K in my favor. Plus, had a nice day yesterday in stocks. Shopify crossing above highs. That's good. We're getting some chart alarms today. So this is good. Dollar weakness. SPY at 405 and 410. Hopefully that's the case. Take every bit of advantage of that as you can. Okay. All right, traders. Have a fantastic weekend. I'll be back on Monday next week for the YouTube channel, youtube.com/Chris Pulver. Also, I would recommend, again, if you want to, I'm not sure how many of you out there have Twitter, but I'm on it. I've been on it for a long, long time, but I'm starting to get way more active. So my handle is at @RealChrisPulver, and I'm posting on Twitter almost every day now. I'll pull a chart. I'll pull something. It's mostly, it's not trading advice. None of that. Never is. It's just throwing some comments out there, but stuff we're talking about, trading rooms, highlights. So, if you want to follow me on Twitter, that's great, at @RealChrisPulver. And cool beans. All right, everybody, have a great Friday. Everyone in my classes today, I'll see you then next week on YouTube, Mondays and Fridays, 9 a.m. Eastern Time for the Pulver Report. Okay. Scammer, Andre, what are you talking about? FTX? Are you talking about crypto in general? Look, crypto and software is very different than Bitcoin. So, like I said, I've said this literally for the last 4 years. If you're going to invest money in crypto, in blockchain, in Web 3.0, in Bitcoin, it's 100% risk capital. You have to be comfortable with that. So if you are, I am, right? Like I'm willing to say, okay, 10% of my net worth, I'm willing to tie up in Bitcoin, in Ethereum, and that combination. And if that's too high, take it down. But for the hedge fund I work for, we're talking about a 3 to 5% fixed allocation. So as more funds come in as we're growing, same thing. I want to keep that kind of consistency where we have a pretty fixed 3 to 5%, because again, it's speculation, but can we make 3 to 5%? Yes, we can definitely make 3 to 5% through the markets. But if it's 3 to 5% that has a 20x upside, that's a 3 to 5% asymmetrical trade that gives us a lot of potential profits for very little risk. So that's what's exciting. But obviously, this year crypto's just been just obliterated. And it doesn't help that it's exposing all the Ponzi's, all the fake garbage, all the scams, and unfortunately, look, scammer's gonna scam. Period. So be careful. Not your keys, not your cheese. Be careful. That's all I'm saying. It's risk capital. Okay. All right, thanks everybody. Before you go, if you hit the thumbs up button, please do that. It helps the algorithm, supports the channel, all that good stuff. YouTube loves it. I love it. And I'll see you next week. All right, traders, take care. Bye.